a $1.7 trillion economy, 4th largest exporter of raw materials, 12th largest economy by GDP, but it only ranks 55th in population size. It's the nation you all know and love, Australia. But you want to know what the best dividend options are available without doing the researching and picking of stocks. And that's why today we're going to be going over some of the best dividend ETFs available to everyday Australians, whilst also going over some different aspects of the funds to have a better understanding on which one might work better for you. Now, this wouldn't be an ETF video if we didn't mention Vanguard. So let's go on with them first, and then we'll go into other funds that you might not have heard of. Starting with VHY, Vanguard Australia's Shares High Yield ETF. And for the past year, the price per share has floated around $70 to $74. Assets under management are just shy of $4 billion, holding 66 companies, fees coming in at 0.25%, yield is at 5%, with a total 5-year performance of 8.78%. And now you're probably noticing franking credits coming in at 66.9%, so just shy of 67%. And maybe some of you don't know what franking credits are. So we'll just quickly go over 2 scenarios to better explain franking credits so you understand what you're looking at. Franking credits in a nutshell is just saying that the company has already paid tax on these dividends. And this is important as dividends are classed as income. And that is why it's so important to know whether or not you have franking credits on your dividends, as you don't want to be paying double tax for no reason. For these 2 scenarios, there's going to be one for the tax income bracket of 19% and one for the tax bracket of 32.5%. For the whole year, you've only earned $100 and only purely from dividends, just to make sure that we can focus down onto what dividends are and what franking credits are. Now, on this $100 of dividend income, they have been fully franked, and you're in the 19% bracket. So with that being known, and the company's tax bracket coming in at 30%, you got 11% disparity in your favor. That means that on that $100 of income, you're entitled to $11 tax rebate. That means that your now total income for the year is going to come in at $111. This is awesome because you made 11% on your post-tax income. Now for the second scenario, where you're in a 32.5% bracket, you're not going to get a rebate, but you are going to pay less tax, as the company tax is already at 30%. So you at 32.5%, you only need to pay 2.5% on tax. So your total income for the year is going to come in at $97.50. Now, to relate that to the Vanguard fund of just shy of the 67 companies having franking credits, that just means 33% of companies haven't paid taxes on those dividend incomes. Now moving on, we're going to go on with IHD, iShares S&P ASX Dividends Opportunities ESG Screened ETF. An absolute mouthful, with the low of price per share coming in at $12.50 over the past year and a high of $14. Assets under management are just coming over 300 million, with 48 company holdings and just shy of 0.25% on fees. It has had a 5.75% dividend yield return with a performance of 5.05% for the last 5 years. The fund is also coming in with a franking level of 75.71%. Additionally, if you've liked today's video or found it informative, leaving a like below would mean a lot to me. And if you'd like to see more of me, please subscribe. Moving on, we have YMAX, Better Shares Equity Yield Maximizer Fund, with a price per share coming in between $7 and $10 over the past year, $500 million of assets under management, consisting of 20 companies with a per annum fee just over 0.75%, but boasting the highest dividend yield at 7.8% return, with a 5-year performance of 6.37%, with a franking level of just over 50%. And the fourth one to make this list is RDV, Russell's Investments High Dividend Australian Shares ETF. This is traded at just over $25 to $31 over the past year, 2.25 billion assets under management, 50 companies in the holdings, 0.34% in per annum fees, 4.71% in dividend yield, with a 5-year performance of 5.22%. But there's something these 4 ETFs all share in common. If you go look at their top 10 holdings, it becomes extremely obvious. Let me highlight it for you. In the top 10 holdings of these ETF funds, you can consistently see the financial sector. On top of that, the big 4 banks making it into this run, consistently making up near, if not more, than 30% of assets under management. Now, should this come as a surprise to anyone? No, it really shouldn't, as The financial sector in Australia is one of the most profitable sectors in Australia's economy. But maybe you don't want to invest in Australia, or you want to invest in Australia, but you also want to invest in the international market. So let's go over the following two options. Starting with UMAX, Beta Shares S&P 500 Yield Maximizer. Now this ETF tracks the S&P 500 in America. Now price per share over the last year has been trading around $25 on the low end and $29 on the high end. It has one of the highest fees at 0.79% with a dividend yield of 4.5%, but with an astonishing 5-year performance of 9.94%. Now you're probably wondering, do I get franking credits for these international shares? No, they're not called franking credits, but you can get foreign credits on this income. As just like Australia, some companies pay their taxes outright before distributing dividends to their shareholders. And my strongest recommendation would be if you're investing in the foreign markets and receiving income from them, you should definitely talk to an accountant to ensure that you're leaving no money on the table and getting the best tax returns possible. It'll also keep you out of trouble with the pesky ATO. And there's so many dividend ETFs available out there. So if there's ones that you are investing in that haven't made this list today, comment them down below so everyday Australian investors like yourself can have an idea of what other options are available to them. And last but not least, we've got WDIV S&P Global Dividend Fund. Holding just shy of 100 companies, assets under management are just over $250,000 with a decent dividend yield of 5.59% with an overall performance over the last 5 years at just over 3%. So there you have it. 6 of some of the best dividend paying ETFs out there. And of course there are others out there. And again, if you want to comment down below what ones you're investing in these days, I do really get a kick out of seeing what you guys are investing in.